Good morning, everybody. Mike Vacchi, Princeton Trader, here with your Thursday market webcast. Okay, so we had the Fed yesterday. You can see 2 days of support at the 9-day. They tried to take it down off the Fed announcement. It ended up being a really nice short and then a really nice long. They made a higher low versus yesterday's low in the overnight, traded as low as 29.91 quarter. Now they're going to go ahead and try to take out the high from yesterday. We're trading 30.10 right now. So we ended up, just as far as what the room did, we were short the 03 area. The pre-FOMC number, let's go to the hourly chart. The pre-FOMC number, the pre-print was 3,000 quarter. So, when it failed to get above that here and started to slip back through, that became a really nice short for us. Took it down, covered it, and then waited to see if it was going to fail at the time, the 5-minute mid-band, which it did. And we didn't get long until right around 92. And then we rode that up into the highs, which ended up being a really nice trade. The thing about volatility is, you have to, especially on a Fed day, if the reaction is potentially to the downside, you have to give them a chance to make that pronounced lower high and then lower low, because that is where the 20, 30, 40, 50 handle move can be born out of. Instead, what they did was they created a higher low, and they created another higher low here, and they're trying to extend the real move up above yesterday's high at 1375. And if they can do that, then as Thursday heads into Friday, this 2575 we talked about the last few days is definitely under threat. So key areas for me right now, we are long from this morning. We are long against the 02 area, so we're just kind of letting that work. We'll hold that into the open and we'll see what happens. You've got I already mentioned the preprint for the FOMC is 3,000 quarter. That weekly pivot's down at 98. So they may have danced around it a couple of times. They may have spiked it low. But if you throw out this spike, which was immediately rejected, what you have is a test of weekly pivot here and here that's held. Higher low at the pre-FOMC price, and now they're attempting to break it up and over, which is pretty typical for post-Fed stuff when the bulls end up ultimately winning. Volume weighted average price is locked up with the hourly mid band at 3,002.75. And it's, I would be disappointed, might be a strong word, but I would be a little annoyed if we went all the way back again. I think ideally what the bulls need to do is they need to build from over 3,000 and extend up and over the top. If the nice part about it is if we go all the way back, then the Bears have a chance to really take it down. Of course, all of this is news driven. You got geopolitical stuff. You've got Trump versus Powell and the whole deal. So I'll be interested to see if the news dies down. It seems to me that in a vacuum, this thing wants to climb up and deal with 30.25.75, and then on the front month, 30.32 quarter. All right, everybody have a fantastic day. Trade them well. Come check out the room. Should have been trading the Fed with us yesterday. All the best. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.